Mike Lomas with the Financial Guys joining us now live, talking about the markets and what a week it's been, Mike. And as we're talking to you, yesterday, not a good day at all. What is going on?
Yeah, well, worst day in the market for the year so far. I mean, you guys were sort of hitting it before. What caused yesterday's uncertainty, and it was really the bond market. And people say, well, what is an inverted yield curve? We keep hearing that, and that just really means that investors were so worried yesterday about the near-term future of the market that they were piling money into safer long-term investments like 30-year Treasury bonds, and it drives the yield down. It's just to keep it simple, a good, healthy market means I go out and buy a one-year government bond and maybe I earn 1%, but if I'm willing to commit my money for 30 years, I should earn 2 or 3 or 4%, right? It's a longer time frame. But when that curve gets inverted, it's just the opposite, and it's very weird and unusual. It's not really the reason, though, that the market went down. The market really is going down and causing that yield curve to get inverted because of the uncertainty that's out there. And that is, there's really three major themes that we've been looking at. One is the Federal Reserve, and I think yesterday should have really set an alarm clock off for the Fed to say, when you meet in September, we need to make some changes. There's also going to be not only what is the Fed going to do in September, but what are their comments going forward, and what do they feel like, and where do they feel interest rates are going to go? Of course, you've got the uncertainty with China and the trade talks, and then you've got what I call political uncertainty, which is you really have, because it's an election season, we're starting to see the presidential debates. You're starting to get that negative talk out there, which is, really in this case, the Democrats saying, hey, we think President Trump's not doing all the right things. We may go into a recession. We're not there now. And, a recession is really oftentimes a lack of consumer confidence. And that's what we really, truly need to focus on is consumer confidence is key. And I'll tell you, there was a good sign this morning. Walmart beat earnings, and you started to see the Dow futures that were down a few hundred points this morning actually reverse course and go the opposite way. So I will say this, and we've been saying this for a while. Yesterday, if you really dissected the stock market, there was a few things that happened that I thought were really good. Number one was a flight to quality. You started to see some of the companies like Tesla get really beat up, and beat up more so than some of the good companies out there. But you saw the good companies sort of hold their own, and then you actually also saw the bond market do pretty well. And so you've always heard me say diversify, and because of that, if you were properly diversified yesterday, you had winners out there. It wasn't all losers.
Mike, looking at the futures this morning, it's hard to tell which way the market's going to go today because they were up overnight, then they went back into the red, and now they're up again in the green.
Yeah, well, nobody likes to hear this, but, what ends a correction or a bear market has always been massive volatility. And, to me, that's a good sign when you start to see, the markets all over the place, because that really means that, we're possibly running out of sellers. And I think one of the things investors need to remember is, first of all, if you're going to invest in the stock market, you need to take a long-term approach to that. And, you've been listening to me for years on this station. When the market pulls back, I always try to sound optimistic. I say, hey, look, these are the times you want to buy stocks. Now, the funny thing is stocks can get cheaper. So if you look at the financial crisis that we went through a bunch of years ago, I said, I would make subtle adjustments and slowly buy into it with the understanding that somebody that's going to invest in the stock market, and let's say it's your 401k plan, you're not going to use that money for 5 or 6 or 10 years. So now is the time to accumulate. I will say, though, and I'll go back to, it is time to look at your portfolio and revisit and make sure you're buying quality stuff. I think you're starting to see a rotation in the market. You're starting to see the guys at the top, the companies that have real solid earnings, that don't have a lot of debt, they're the ones that seem to be holding their own. And I think that's where money's going to flow back into when the market reverses course. And unfortunately, you see companies like Tesla that got beat up more so than the rest of the market, but that's because their balance sheets and their business model just isn't that good. So I think we're going back to some of the basics.
Does the volatility continue into December? I mean, that's the new deadline the president put on these tariffs, which, listening to a lot of analysts, they seem to be placing a lot of the uncertainty and blame for this on kind of no one knowing what's going to happen with tariffs.
Well, I think you bring up, it's funny, you bring up a really good point, and that is the seasonality of the market. And we're going into a period, August, September, October, that historically seems to be more volatile than the rest of the year. I don't know why that is, but that's been the case. And so I think, going back to, what I originally said, which is the big three we're looking at, Fed, trade, and political talk, I think, those things we need to have some type of certainty for us to take the next leg up. It doesn't, however, mean that we don't continue to trade sideways. And if you look at the stock market, and specifically the Dow Jones Industrial Average, we've been trading between 26,000 and 24,000 for 2 years. And, that we've found a really nice solid floor at Dow 24,000, but we really have a lot of trouble breaking through 26,000 and staying there and moving forward. So I definitely think you need to have some clarity with trade. I think the toughest part has been really China, to me, has not been fair to the U.S. and really to investors. And, I think China continues to say, yeah, we're going to talk to you. We understand that, we need to do something here. And then they kick the can down the road. And I think their hopes is that a Donald Trump, might not be in office in another 2 years, and they can go back to abusing us like they've done for the last 40 years. I give Trump a lot of credit. I think Trump is not fighting China to try to win a re-election. He is fighting China to try to fix our trade deals so we're better off for the next 40 years. I do think it's a big deal that, we need to get it fixed, but I also believe that for us to see Dow 50, 60, 100,000, I think Donald's doing the right thing by fighting these folks.